Hey everyone, happy Monday, February 16th. I'm Endrit Sella, and this is Capital Markets Quickie. Let's jump into what's driving the week ahead. Quick note before we dive in. Today's episode is brought to you by AMF Capital Asset Management Frankfurt. Learn more about our funds and strategies at amf-capital.de. All right, let's dive right in. So, with Wall Street taking a break today, attention immediately turns to a packed earnings calendar once trading resumes. Over the coming days, we'll hear from some major consumer, tech, industrial, and financial names, which should give investors fresh insight into spending trends, pricing power, and overall corporate confidence. At the same time, markets will be closely watching the Federal Reserve. The minutes from the most recent Fed meeting are out this week, and investors are looking for any clues on where policy might head next. Back in January, the Fed kept the federal funds rate unchanged in a range of 3.50% to 3.75%. After cutting rates 3 times last year. The backdrop remains a resilient labor market, but inflation pressures are still very much in the picture. On the data front, the macro calendar is loaded. The advance estimate for fourth quarter gross domestic product is expected to show annualized growth of around 3%, down from 4.4% in the third quarter, with the long government shutdown likely having weighed on activity. December personal income is forecast to rise 0.3%. While consumer spending is expected to increase 0.4%, slightly softer than the prior month. The Fed's preferred inflation gauge, the core PCE price index, is also expected to rise 0.3%, signaling that price pressures on households remain sticky. Beyond that, investors will be tracking a long list of indicators, including durable goods orders, industrial production, housing starts and permits, home sales, the trade balance, wholesale inventories, purchasing manager surveys, capital flows, and key sentiment and manufacturing indices across the country. Elsewhere in North America, Canada is set to release inflation data, retail sales, trade figures, and fresh housing numbers, adding more color to the regional growth and policy outlook. In Europe, the spotlight is firmly on the flash purchasing manager surveys for February, especially later in the week. These early reads should give a timely snapshot of business activity across the region. In the euro area, manufacturing is expected to edge closer to stabilization, while services activity could pick up speed. Germany's services sector may cool slightly, though manufacturing contraction is seen easing. In France, services are still expected to shrink, but at a slower pace, while manufacturing growth strengthens. In the United Kingdom, manufacturing should continue expanding at a similar pace to January, while services growth remains positive but moderates a bit. The UK will also see key labor market, inflation, and retail sales data, all of which will feed into expectations for the Bank of England after its recent narrow decision to leave interest rates unchanged. Over in Asia, China's markets are closed today as the week-long Lunar New Year holiday begins and runs through February 23rd, though January foreign direct investment data may still be released. In Japan, investors will assess a wide set of economic indicators. Preliminary fourth quarter GDP is expected to show the economy returning to growth, expanding 0.4% after a 0.6% contraction in the previous quarter. Inflation is seen easing to 2.0%, and trade, production, and sentiment data will round out the picture. So even with a holiday start in the US, this week is anything but quiet. Plenty of data, plenty of signals, and no shortage of market-moving moments ahead. All right, that wraps up today's Capital Markets Quickie. Join me again tomorrow morning for more market updates. See you then.